Really appreciate you setting the tone for the day. It's my pleasure now to actually be the moderator of our second panel. Someone just tapped me on the shoulder and said, Nikhil, you actually haven't introduced yourself. So, my bad. My name is Nikhil Gokhale. I am a research leader at the Cedar-IBSi Intelligence. Been in the financial services industry for more than 2 decades now. I started in the Y2K era when I remember actually going from the 2-digit year field to 4-digit, coding that in the system. So I think, all of us, not just me, but all of us have come a very long way from those days. It's actually my pleasure to be the moderator for the second panel today. I hope we can have the second panel behind me. Oh, there it is. Thank you so much. Let me call upon the first panelist for the day, Vibhor. Vibhor Mundhada, he is the CEO at Neopay. Welcome, Vibhor. Next we have Shoaib Rizvi. He is the Group Head of Digital Products at Emirates NBD. Shoaib. Welcome. Next we have Navneet Dave, Managing Director and Co-Head Group Processing Business at Network International. Finally, we have Jonathan Sommers. He is the director at NetGuardians, which is a cybersecurity company, and of course, not just cybersecurity, but goes all the way in risk management. I'm going to start with you, Vibhor, just to set the tone, set the context, right? I think there is a lot that has happened in the UAE, right? When it comes to digital payments, when it comes to digital payments on the private side or the retail side, as well as the corporate side. What are the 2 or 3 things that have really driven this, significant change?
Hi everyone. Good morning, and thank you for having me here. I think overall, if you see over the past few years, there's a significant change in terms of the overall payments landscape in the UAE and in general in the region, driven, partially by the way the market is, and to a large extent by the regulator as well. We have the FIT program, which, clearly identifies, certain, initiatives that the central bank is driving in order to, increase adoption of digital payments, both in the B2B and B2C space, right? So some of the things which are becoming very, very prevalent and important in the economy in general are instant payments, for example, which is ANI, which is an instant payment platform which has been built and launched in the UAE, or, the UAE moving into their own domestic scheme, which is J1, or, generally in terms of how UAE is a very peculiar market in terms of payments. If you see in the UAE, 25% of volume that comes in is cross-border, and hence you just don't need to look at the domestic changes that are happening. It becomes very important for payment providers, financial institutions to cater to the needs of this cross-border traffic. So it's a very unique market where you just don't talk about your traditional card rails, but alternate payment methods like Alipay, WeChat Pay, or for that matter UPI QR out of India also become very, very critical. I think another important bit on the consumer payment is consumer payments is a smartphone penetration. Again, very, very unique market. Most of us don't carry wallets anymore. Every one of us in the UAE uses XPay. So that movement towards contactless and XPays is a clear shift in the user experience. If you see, more than 95% of transactions in the UAE are contactless. out of those, almost 70-75% are done through XPays, right? So it's no longer just, small ticket transaction, but large ticket transactions through, the enhanced security measures are, happening through XPays. And a lot of value is then being built on the mobile because that's pretty much being used as a mode of payment, not just for XPays, but going forward, with new payment methods like ANI, etc. And obviously, there's a lot of shift, push towards CBDCs, etc. Right? The phase 1 of the central bank program on CBDC is, up and running, and there are conversations on phase 2 as well to increase the use cases, get more participants in. So those are some of the thoughts that I have in terms of the trends and what's happening in payments. Yeah.
Thanks. I think it was important to set that context because if we are going to predict the future, we need to know what was it that drove the payments in the past. So I'm going to go to Shoaib next. Shoaib, I think right from the start of the day, we've been talking about customer experience, the platforms where customers interact being the most important things. People looking at I'm not sure. I think we spoke about people looking at their mobile phones to see if there is update on their app. I think those app happens seamlessly, and you open the app and you suddenly see, oh, this has changed. But tell me something. How important is customer experience, and how do you look at it from how do you update, push the updates, and how do you make sure that there's no friction every time you push a new update?
Very good. So, important question and a very good question. I think Chetan set the tone for the day when he spoke about the digital banking and the trends of digital banking in this region specifically. And then Vibhor, of course, spoke about the innovations that we are seeing in the space of payments. So if you look at some of those innovations or the trends, as we call them, right? Behind each of this trend is actually a very well-defined customer experience, and that is what is actually making it different, right? So what does that mean? It means, right, all the payment schemes or the new trends that you are seeing in the digital banking, everything is driven by customer experience. Why is it that digital banking is on the up and up in this region? Because the experience that customer gets when they are using a digital banking apps, right? Whether that apps are from a pure play digital bank or even from a conventional banks, you will not find much difference, by the way, in this day and age. And because that conventional banks also are providing the same experience on their apps to those customers, and when customers are using those apps, they are becoming more and more lifestyle apps, right? So they are very convenient, very easy to use, intuitive. Gone are the days when you had to go and search things in your banking systems and apps. They are more data and insights driven. So this is something, the convenience that the customer is looking for, these apps are providing that. So whether it is in the space of payments, whether it is in any other lifestyle choices, those are the things which is being provided through those apps, and hence customers are adopting digital banking. This is very simple, right? However, specifically, since we are in the panel of payments, in payments, what creates it a little bit challenging is that you still need to make sure that these apps, especially in the space of payments, are secure, right? And we have seen, right, as we are increasing the span of digital banking in this region, right, the biggest challenge that we see is how we make it secure. We have seen the rise on the frauds also in this region. We have seen how the fraudsters are, misusing, tapping up to those features. So we have to constantly, as banks, keep it secure. However, keep it very simple, keep it insightful, make it convenient, make it faster, make it transparent. So if you remember in the old days, you used to go to the app, you used to initiate payment, and then you have no idea then what is going to happen next. Right? Is it gone out of the network? Is it with the correspondent bank? Is it reached beneficiary? You are sometimes calling your beneficiary, I sent you money, did you get it? No, I didn't get it. Okay, now who do I go to? So the beneficiary is going to his bank, you are going to your bank, and it's a chaos, right? So every time you used to do payment, it's always ambiguity. I don't know what the hell is going to happen now, right? That's how it was. But if you look at now, actually, before even you have to call your beneficiary, you will get notified that the payment has been credited. And it's instant payments, right? So cross-border instant payments. How is it happening? So making cross-border instant payment within 60 seconds is no more now a luxury, or is no more now a value add. It's the basic necessity. The bank has to provide that, right? So as we go more and more in these payments, whether they are the cash payments, whether they are the card payments, whether they are any other instrument of payments, the experience will continue to drive, and the adoption of that payment scheme, whether it is NPSS, whether it is J1, Vibhor mentioned about the local payment schemes that we are talking about, whether they are cryptos. Now cryptos as a payment instrument are also being regularized. So all of these instruments, the only thing that will determine the success of that is the simplicity and the convenience that customer gets. That's my view.
So essentially you're saying that, every single broken payment can have not just it will have a multiplier impact, and that's one of the biggest reasons why not even a single transaction can fail, right? From a trust Absolutely. And a customer experience.
That's what customers expect. And by the way, this is not just for retail individuals. This is across the board, right? Whether you are serving to the individual customers, whether you are serving to your SME customer base, or you are serving to your corporate customer base, every single place, that is the commitment, that is the trust you have to form, and that is the reliability you have to create. Otherwise, your customer is not going to trust.
So if I can just, probe this a little further. So how do you do it? So what do you do from a technology point of view? What are some of the things that you need to make sure that you have at the back end?
Yeah. So look, as I said, right, for the customers, you have to completely change the experience, right? Instead of giving them this feel that now they're going to come into some unknown and a very complex inputs and very complex information that they have to provide, make it very simple, right? So that's one thing from the experience perspective. Second thing is make it transparent. Give them a view of at every point in time where that payment is.
Right.
Even though if this payment is with you, you are processing or assessing the payment as a bank, is it with the correspondent bank, is it with the beneficiary bank? Where is that payment, right? Even if you cannot do the payment within 60 seconds or within a specific amount of time, you still have to provide the transparent view of where it is. Because the payment that a person has initiated or a company has initiated, they expect this is their money, right? So they want to know at any point in time where it is. And give them reliability and speed. If they are making a payment, definitely that payment is for a purpose, right? Mm-hmm. And if they are sending a payment to their suppliers for the goods, if somebody is transferring money for school fees, if somebody is transferring money to somebody for the use, everyone wants that payment to be instant or near instant, so speed has to be maintained for that, right? And the last but not the least is security. Payment has to be secure. So if your app is not secure enough, no matter how good experience you provide and no matter how interesting your product offering is,
absolutely,
people will, because in the end of the day, it's a financial app.
Absolutely, I think it's a game of trust, right? At the end of the day, I think overall, I think the kind of redundancies that you probably need to build into your tech platforms has to be phenomenal. I think I think 60 seconds that you speak about is probably luxury. I think we're fast going towards talking about milliseconds and not even seconds. I'm going to bring you in, Navneet. I think there is one specific thing that I definitely want to cover as a part of the payments panel, which is the ISO 20022. It has a different way to call it, but apologize, I can't exactly pronounce it that way. It's 222. Is that how is it called?
20022 or something.
20022. So nobody understands when I call it 20022. But the migration, the swift migration, it's a major undertaking for the industry. How should banks be preparing for this transition? First of all, why is it so important, and how should banks be preparing for the transition? And I think this is clearly more from a corporate client point of view. So your thoughts on some of the things that we covered earlier as well in terms of the customer experience and what is it that driving digital. So, I think a loaded question, 3 or 4 questions put together for you.
So thank you for having me in the panel. So before I answer that, I also must share my personal experience. I've been sending money, being a father of 2 children who are studying in US since 2010. I've been sending money. So when I used to send money to them in 2010, for 2 or 3 days, it used to reflect into their bank account as credit. I used to transfer from a foreign bank here, some intermediary bank, then appeared in the bank account in 3 days' time. Only about 2 weeks back, I sent to my son some money, and I said, I've sent you money. And within 2 hours, he sent a message saying, received it, it's credited into my bank account. That was only 2 hours. Obviously, I assume it's because of faster messaging, better compliance, more technology, and better customer experience that he had the money in his bank account to use within 2 hours. I wasn't expecting it, but that was a good experience.
By any chance, did you get a message saying received the money and spent it?
No, I didn't get any notification from my bank, but at least he confirmed that he received the money. Yeah. So bringing on to why, what banks need to do to ensure that this messaging protocol is implemented. Obviously, I'd like to borrow from what Sampath said earlier, a few of his points around change in infrastructure and getting people, people with skill who can help implement these kind of things. So most important thing is to look your infrastructure, look at how would it integrate into your banking environment with the skills of people that ensure that this implementation is seamless, is without error, and is effective. Now, also, apart from this, bank needs to really invest a lot in training and communication, training, testing, and communication, training internally to back office staff, training, testing internally, as well as communicating with the client, because even the corporate client has a lot of benefits of this change in protocol. Now, in terms of what are the benefits, obviously, it's a much richer protocol with many more data elements, which means transaction is enriched, better reconciliation. Also, from a compliance point of view, earlier the banks used to take a lot of time to discover why is the payment being sent, especially cross-border, take time. But with this kind of a protocol, it becomes so much easier to identify high-risk transaction versus low-risk transaction versus regular transaction with the purpose of transaction, so that speed of transfer is becoming better. So these are the advantages and why it should be done. Also, as a company, since you receive your payment faster, it means better cash management, right? Better liquidity. You don't need to take credit for X number of days because your supplier is going to make payment. You're certain when the money is going to come into your account post the person sending money to you informs. So these are the benefits.
Thank you. Jonathan, not leaving you out. NetGuardians, putting your NetGuardians hat on. I think we spoke about security, cyber security. There is, of course, things about the overall, fraud and AML. If you could tell us, how do you look at the problem in terms of making sure that digital payments are secure? I know it's a very broad question, but if you could break it down between the 3 aspects in terms of, the security of each payment, AML, and fraud.
Excellent. Thanks, Nikhil. Thanks very much for inviting NetGuardians to this esteemed panel and to the conference. Good question. So I'd like to just start with saying what the scale of the problem is for fraud in banks at the moment. And Interpol, only in April, released a report that said that the scammers had stolen last year globally over $1 trillion from customers and banks. $1 trillion. And from what Chetan was saying earlier, that's equivalent to the entire banking assets of the UAE. That's an amazing number of statistics. And we believe that number is going to get larger for 2024. So it's a massive problem. The trends outlined in our white paper, which I've put on your desks, so please take it away with you. We outline the frauds that are affecting banks year on, year out. And some of them we're finding more and more, like more deception-type frauds, more investment frauds, more business email compromise-type frauds, more romance scams. The scammers are still there. They're still doing the tried and tested type scams like SIM swap frauds, internal frauds that lots of the banks are finding. But the one we're most concerned about that's hitting more customers, and I'm sure everybody's had some experience of these, are the authorized push payment frauds, APP type frauds. Authorized being that it is actually the owner of the account who's inducing and doing the transaction. So no amount of KYC checks is going to stop those kinds of frauds. Right. These are the kind of investment scams, romance scams that we're finding. So to come to your question, how do you stop those? Well, of course, you can try implementing loads of rules, as we used to in fraud prevention in the past. You would implement a number of rules and layers of rules to try and second-guess the fraudsters. Now, unfortunately, the fraudsters are cleverer now. They're more sophisticated. They're very well organized. And they love rules because they easily get around them. So what you've got to do is implement an AI solution. And that's where AI comes in, of course. You've got to look for patterns of behaviors within the accounts that you know. So as NetGuardians, we prevent frauds by following the money, by understanding the customers of our customers, understanding the bank's customers. So when a transaction comes in, we know what the normality of that customer is in terms of the transactions that you have, what kind of device you're using, when you normally transact, how much you normally send, if you're sending to your children in the States, for example, or if it's something slightly unusual. Slightly unusual might be you're buying a car, and we shouldn't expect a fraud management system to stop that transaction. It's just slightly unusual if it's going to a dealer that somebody in the bank has paid to before. But if that transaction is going to someone who you've never paid before, or indeed the bank has never paid to that company before, or even at a higher level, what we're doing now is we're involving all the banks. So if nobody in the UAE has ever paid to that company as an amount that you're trying to pay to now, it's indicative of either them being a mule or a fraud. So we would say, using AI, in a blink of an eye, we would investigate that transaction. We would suggest to the bank you stop that transaction and you investigate. Now, what used to happen before, you used to get lots of false positives in that analysis, and that would be the bane of fraud management systems. You get so many false positives, it wasn't worth stopping the transactions. But now, with NetGuardians and other systems, AI, machine learning, the algorithms are so quick and so clever, we're able to say with 99% accuracy, this transaction is fraudulent, it should be stopped, without affecting the friction of the customer, without affecting their usability of the solution. So using AI, machine learning algorithms, that's the way.
You make it sound like magic, okay? Is there a war story you can share, or anyone on the panel, is there a war story you can share of how did this really work? Make it come alive for the audience.
How does AI work?
Yeah, we'll cover that, by the way, later in the day, a little bit on that. But any war story that you can think of that which will probably stick to people's mind.
Yeah, I think it's how I learned more about AI. In lockdown, I did a course from Oxford about how AI works, and machine learning, and really it comes down to statistics over statistics. So it's an interesting way of analyzing data very quickly. So we use big data technology. We have a big pool of information about the customer in our instances. So you've got information about all their kind of nuances, how they transact, what they normally do. And what AI does, it enables very quickly to analyze all that information in the blink of an eye, quicker than anything possible before. So it provides, another way of looking at it is, it enables you to automatically create rules for each individual customer. So you're not just creating rules yourself, you're not second-guessing the fraudsters, the AI is doing it for you, much better, much quicker format.
Got it. Will there ever be a day where we have no frauds?
No. No,
so
I look forward to the day.
It's probably a case where you are trying to always, learn and stay ahead of the game all the single time. making sure that the frauds don't become so large that they disrupt the system. Is that fair to say?
Absolutely, yes. Sorry, I think there will be a time when we are reducing the frauds to a minimum, but I think there will always be fraudsters out there, as there will always be bank robbers, there will always be ways around it. But if we can reduce the frauds by 99.9%, then we're very happy. There's always a trade-off between the friction of the customer and the amount of frauds that you can pick up. That's what we're aiming for.
Vibhor, you saying?
I was making the same point. It's a very rhetorical question, but generally the only way it can happen is you stop doing everything, right? You need to maintain the balance between, that's what we work on as bankers, as payment companies, right? As we talk about the complex nature of the payments that are happening in the UAE as well as globally, be it card payments, instant payments, remittances, B2B payments, the complexity and the challenge that all of us have as an industry is to make sure that we maintain the balance. I could maintain my frauds to bare minimum 0, but if my authorizations and success rates are going for a toss, then what's the point? So I mean, the only way it could happen is stop everything, which is not possible. So that's which is the same point that you made in terms of the balance between success rates versus fraud. Yeah, that's always a most hottest debated topic, especially in payments companies.
Perfect. I'm going to come back to you, Vibhor, and stay with you, in fact. So I know that you were very recently in India, and India, I think, has done a really good job when it comes to digital payments. Is there anything that you picked up there, and how similar, dissimilar is the rails that UAE is putting in place, and how do you see that moving going forward?
See, I think everyone has heard about the India story in payments in terms of UPI and the use cases that have built around it. My view is that India had card penetration, and then when UPI came in, India just leapfrogged from cards to QR code-based instant payments pretty fast, and there were use cases built around it. There was a lot of government support in terms of free transaction in UPI, which pretty much changed the user experience for forever in that country, right? So to the extent that when I was in India this time, NPCI International actually launched ability for people like us who don't live in India, anyone who has a payment instrument, they can actually download an app, load that payment instrument as a source of fund, and then pretty much use the UPI infrastructure, which didn't exist, because if you go to India today and if you don't have UPI, trust me, it's very difficult. No one carries cash, right? So the user experience has completely shifted to that mode of payment, and I think similar thing happened in China as well. And a lot of reasons for that was while user experience changed, there was a lot of use cases that were built on top of those payments by companies like WeChat Pay and Alipay. I think if you see the UAE, a lot of collaboration is happening between India and the UAE. For example, from a Neopay perspective, we worked with NPCI to open up acceptance of these, millions and millions of wallets from India onto our merchant infrastructure so that people can accept payments. Most of the payment processes in the UAE now accept cards from India, which are, the RuPay co-branded cards, right? And lastly, if you see, the Jevan payment scheme also works very closely with NPCI to bring, the best practices out of India to here. And NPSS is very interesting because, while we are launching it, we'll need to see how those pick up in the UAE in terms of instant payments. My personal view is that given, there are people who are of the view that given it's already a very highly penetrated market in terms of cards, QR code-based instant payments, may not have that much of attraction as in India. I subscribe to that idea a little bit, but if you see, there was similar market like Singapore, which was, very heavy penetrated with cards, and SGQR is working very well in certain use cases like small merchants, transit, etc. So, in the UAE, while the infrastructure is available, we always we spoke about user experience. We need to build use cases which allow users both on the consumer side as well as businesses side to use that. And lastly, very interesting use cases are being built on the NPSS rail for wholesale payments. I think that's something that can be disrupted in the UAE using those rails. And we spoke about cross-border remittances, so a lot of interoperability is being built between different instant payment methods all around the world, some directly through bilats and some through fintechs that are coming in who are becoming the orchestration layers between the various instant payment platforms. Yeah.
Anything that, how do you think ANI coming in would make a difference to the overall payments landscape? And maybe specifically for Mashrak Neopay.
See, for us, Neopay primarily is a payments company. A large part of business is merchant acquiring and processing. So for us, ANI coming in, it's our responsibility to allow the best user experience of ANI across our merchant base. That's something that we have already done. And I think the industry as a whole needs to build, use cases, stuff like, for example, request to pay, which is doing very well in India, or getting people who are today outside the realm of digital payments, both on the consumer side, which is why you have an ANI app, which is actually not sitting in a bank, but you have a white-labeled ANI app, where you may not be a banking customer generally, but you just can take that ANI app. Or the blue-collar workers, the professionals who don't have trade license to set up complex and large payment infrastructure could actually accept payments using ANI. So I think for us, it's important as an industry to build use cases around it, so that we can see adoption. And I truly believe that there'll definitely be more cash to digital adoption with ANI, and we may reach a Singapore model where both coexist.
So maybe next year, when we are discussing this, we will have many more use cases and success stories.
I hope so. I think all of us in the room are working towards that one way or the other, whether we are on the bank side, payment provider side, or the issuer side, or fintechs. I think one good thing that ANI has done is you could become, consumer fintechs can actually use providers such as us to use ANI as a provider on record, and they could build very interesting use cases where companies which are large consumer internet companies could build use cases which probably are similar to what's happening in China, for example. Yeah.
Absolutely, and we as consulting and research firms also are in this game of helping helping the digital payments thrive. So I'm happy that we are also contributing in a small way or the other. Shoaib, we were touched upon regulations. If you could tell us a little bit more, why do you think having supportive regulations is important for, especially in payments?
So I wanted to touch upon one point, and which is also continuation to the answer also, right? That all these payment schemes and the new trends that we are seeing in the payments, right? They are of course regulator led. So take example of NPSS or ANI, right? So it is a regulator-led scheme which has been introduced and has been mandated by the regulator in this country. But the success of that is depending upon exactly the use cases and what experience you provide on that, right? This is a cards dominant market. Everyone use cards for payments mostly. Even if you are using wallets, not physical cards, wallets are also driven by cards. So unless and until now, the adoption of that NPSS will depend upon how the use cases of payments are. And as a consumer, why would I want to use my account to transfer the money, not my card, if I'm not getting the right benefit out of that, right? So that is something that will always be there, which is again touches upon the consumer experience. I'm sorry, I keep harping upon that, but that's the answer to everything, in fact. The other very important aspect is the open finance, right? Now with open finance regulation almost getting finalized, and banks will have to come onto that later part of this year, and then over the next year this will get a little bit stabilized and mature in this country. That will be a complete game changer. And why that will be a game changer is because one thing is that it will give people and companies, first of all, which are non-financial player, an ability to provide financial solutions seamlessly. It will also be an interesting instrument in the hands of everybody, that you don't need to, if you are having accounts across banks, you don't need to go to multiple apps to do things. You can choose the bank of your choice and can continue to use that bank and still operate your account on another bank. And that is something, if you are having multiple banks, if you are banking with multiple banks, right, how will you decide which, because you will be able to see your account balances, your aggregation, you will be able to sweep money, you will be able to transfer money seamlessly, everything, right? So then, what will be the decision factor for a consumer to decide which app should I use? And that decision factor is again, convenience, experience, security, reliability, right? So you can look at it from whichever angle you want to look at it. This is always going to be the driving factor, right? And it's an interesting, there are many, many interesting use cases. Of course, it's not something new. We have seen it across various regions. We have seen it in UK, how the open finance, advent of open finance changed the consumer experience and how it changed the game for a lot of banks and a lot of non-banking companies. So that is something which is going to be very, very interesting. And we'll see how it spans out. And banks have to be ready for that.
So, I think I have to repeat what I said before, maybe we're sitting here next year and we'll have many more use cases that we will be, and success stories that we'll be talking about. So, can I sign you up for, September 2025?
Pleasure.
Navneet, I'm going to come to you, as a payment processor, incorporating newer technologies, how do you see AI benefiting you and your clients?
Yeah. So, going back to Chetan's presentation, and he referred, I think, saying the newer banks, the digital banks, almost have 20% share of new flows, in last 12 months or whatever the period was. Now, obviously, if you don't bring new technology, it's unlikely that you will retain market share or grow your better customer experience, as talked about, or grow your revenues or grow your profits. So newer technologies are important. As a payment processor, also at Network, we have invested in a lot of new technologies. Some of them are AI-based, and the use case range from fraud monitoring, detection, scoring, to loyalty, to personalized, hyper-personalized offers. So all that is being done. Now, the benefits are revenue, market share, better experience, more safety. Sampath talked about STP and also process changes, right? A lot of our processes were manual. Today, with the technology that we're implementing, even reconciliation, whether you call it two-way, three-way, four-way reconciliation, with we are a multi-market, multi-client setup to reconcile different scheme, different domestic scheme, transaction, their files, all is being automated, and AI and new technologies are helping a lot, Obviously, implementing these come with lots of challenges. Some we discussed in my previous answer, but also for us to continue complying with different regulatory environments in different market, where data privacy or local regulation or local hosting are to be adhered to, is a challenge that we have to manage. Other thing is scalability and cost effectiveness of this technology. We need to address, because we cannot create different solutions for different market and for different client set. So we got to be very careful of what we are investing is future-proof and can be adopted to serve different customer segments that we are serving. So these are the things.
So, AI is starting to sound like a solution for a lot many more things. We will have a very interesting presentation that Ramki will be doing right after the coffee break. I'm sure it's going to be something that hopefully unravels some of the magic that we've been speaking about. Jonathan, final question for you before I open up for any one or two audience questions. Just looking at the future, I'm putting in the spotlight, tell me, looking at the future, how will, how important will security be, and how, as a bank, what should they be doing to stay ahead of any fraudsters?
Good. Another good question. Thanks, Nikhil. So I think the future of banking is based on trust, of course. Your customers have to trust that their money is kept safe and their money is kept secure. All the transactions have to be protected from fraudsters. So that's the future. I think you've got to make sure that otherwise your customers will go elsewhere to banks that they see as more trustworthy. You've got to keep them trustworthy. So in order to do that, you have to implement good solutions that will protect them, protect their money, and protect the bank as well. And of course, that's where AI comes in. AI is the only solution available in the marketplace now. Machine learning, a subset of AI that can identify those suspect transactions in a blink of an eye. And because the fraudsters are using AI themselves, we've seen lots of deep fakes type frauds. We've seen lots of examples where Gen AI is being used to good effect by the fraudsters. So banks have to fight fire with fire using AI against AI. And thirdly, I think that the main reason for implementing an AI solution is because the fraudsters know. They talk. We track them on the dark web, and they talk about who the best banks are to hit, and the banks without an AI solution are seen as easy targets. So you must implement an AI solution for the future, protect you and your customers, because AI, machine learning, the algorithms are the best at the moment. Future technologies will progress. We'll see better use of blockchain, I think, which will help security. The best use of blockchain at the moment is crypto, which at the moment has a bad reputation for security, but I think the better use of blockchain for banks in the future is to enhance the transparency. Shoaib was saying about the transparency of payments going through. I think blockchain will play a great part in that. And of course, quantum computing coming in the future as well. So we'll see a massive impact in security, not just in banking, but also in transcripting some of the secure transactions that have happened in the past as well. So the fraudsters will get use of that and be able to encrypt it, unencrypt it very easily using quantum computing. So we've got to get used to all these new technologies coming forward. I think to wrap up, security is going to be most important for banks. In the UAE, we haven't really seen the influx of frauds as other regions. I think we've been quite lucky here. The fraudsters have now started to target the UAE customers, of course, some good high net worth customer targets. Banks have to now catch up and implement the solutions that's going to stop those fraudsters and move them on somewhere else.
Awesome. It's going to be a very interesting battle, AI against AI. I think that could be one of the future panel topics sometimes. With that, I'm going to open up for one or two questions. If you have a burning question, you should put up your hand right up front. Oh, I have three.
Hi. A quick question to bankers, I would say, and maybe the NI team. So how do you see the competition of the cryptocurrency payments, and how are you planning to adopt maybe central bank digital currency, which might come in future? So.
Question to me? This is to Navneet or me?
Anybody can answer, I guess, yeah.
Yeah, so certainly central bank digital currency, its acceptance at merchant network or other things, we have agreed to participate. I mean, we are participating in it and enabling that, yeah. That's the direction. Also, the entire new regulation that central bank talked recently about cryptocurrency, is it dirham-backed versus stablecoin versus crypto? Those regulations have been announced, I guess, 45 days back. Yeah. That gives a lot of clarity of the roles that we, as a payment processor or as a merchant acquirer, can do and cannot do. So a lot of clarity has come in, and we are actively discussing with some banks to enable that, some fintechs to bring them to market, and also with certain merchant partners to enable acceptance. But all within the regulation. Earlier, everybody thought they can do everything onshore, but that's not the case. So we are engaged with various constituents.
I think the regulations are far more clear, as Navneet is saying. So I think use cases are easier to build for companies such as us and generally ecosystem providers. So you can see some lot of action in that space.
My question is to you, Vibhor. We can't have a conversation on payments in the UAE without talking about remittances. And we all know that there is a huge, now that we have, and Nikhil brought you to the topic of you visiting India and what's happening in UPI and what's happening here. What do you see as, in the next 3-5 years, the space in the UAE from a remittance standpoint? We do have a lot of remittance houses. How relevant would they be in the context of what we see as digital payments? What's the likely outlook that you see likely to happen from a remittance standpoint, particularly from a intercontinental or payments to India and so on and so forth?
So I think that's a space that keeps evolving, and as I said, there are multiple channels through which remittances are happening today. Especially most of the banks are fairly advanced in terms of how they work, right? So there are very smart routing algorithms using a lot of data and AI. So see, one thing is that there are multiple channels that are available to do remittance today for a financial institution, right? You have Buna, or you have your standard SWIFT. You have fintechs like Neom and some other guys, or Transfast, who are building capability to distribute pretty fast. And lastly, you have these bilats with India, for example, through UPI, etc., right? But a user is agnostic in terms of what channel you are using. So a lot of work we are doing in terms of using data, using analytics to make sure which is the right path for the transaction to go through, which is optimum from a user perspective, as well as managing revenues and P&Ls for us as a remittance provider, right? So I think that's a lot. That's something that is going to continue to be penetrated as more and more tech becomes available. And I think a lot of exchange houses are also going on to that bandwagon. See, UAE is also again then split, right? A lot of blue collar workers still go to exchange houses. I think when you have penetration of payment methods like ANI, etc., which become a collection mode for a lot of these products that are being built on the remittance side, I think we could see some disruption in terms of blue collar workers also moving towards using methods like ANI, or if open banking comes up, it allows some fintechs to penetrate and get these guys in the banking ecosystem across various channels. And you see exchange houses are also investing a lot in digital. Most of the large exchange houses that you see have their own digital apps, which do a lot of work similar to what I spoke about in terms of multiple channels, multiple bilat partnerships, etc.
Thank you. I have to apologize. We will have to, we will take one question, and we have two questions there. Can we take it, Marwan? Oh, we can. Okay, go ahead, please.
Yeah, okay, this is a quick question. Yeah, okay, for Navneet. Hi. So when you talk about the international transfer, so is that also limited to any cap, any amount which can be an instant transfer? As an international transfer, yeah.
International transfer remittance, yeah?
Yeah, remittance, exactly.
Yeah, of course. It's a regulated entity, a regulated activity. So you got to be either a bank or exchange house or somebody else to get licenses. I'm not aware of the caps, to be honest, but yes, since it's a regulated activity, each type of individual or corporate would have certain limits. Perhaps somebody else can answer. I'm not aware of the caps that exist at individual level or a corporate level or daily limit level.
Yeah, definitely, because as even local transfers, it doesn't take with certain amount. So obviously for international would take longer time. I don't know whether the same with Emirates NBD.
So let me maybe, I don't know. So look, the caps that we define on transfers are purely basis on our appetite to be able to consume some sort of a fraudulent activity or some sort of a compromise if it happens. So For example, I'll give you an example. So NPSS is a local payment scheme. It's not an international payment scheme, right? But still, central bank has put a cap, right? And the cap for the NPSS payment is 50,000. So if you do a payment of more than 50,000, that payment will not routed by the NPSS scheme. Right? Similarly, and why is that? So it's not that we cannot do. Of course, we can do 100,000 and more also. There is no nothing that limits us from the technology or infrastructure perspective. It's just the appetite of how much you can allow instant versus how much you don't want to allow, and the risk that you have in instant payments, right, versus a secure payment. So in the international payments also, the banks which are offering instant payments, they define that cap. Central bank is not determining that for them. So if you have Vibhor mentioned, right, there are multiple ways to do instant payments. You can do a bilateral agreement with a certain country and certain bank. So we as Emirates NBD have that. You can also use some of the fintechs which provides you this ability, such as Neom and etc. We use them also. But in the end, you as a bank define that cap, and that cap is depending upon your risk appetite.
Just to add to that, some banks, including yours, does offer control to the customer to set or change the daily limit, right? Yeah. As a customer, I may have been set a predefined limit, but the app does allow for the customer to instantly change daily limit for that particular day or that particular transaction, which again, I think is a great customer experience.
Yeah.
We have one final question.
Hi, Gaurav Thakur here from Quality Kiosk. Excellent panel. There are a couple of things, Shoaib, that you spoke of and that resonated very well with me. That was end user experience, transparency, and building reliability into your application ecosystem. My question is this: banking and financial services, what you operate in the payments domain, is complex. It is an ecosystem play. Multiple connections, APIs, microservices, fintech, a lot of things happening. What you echoed, which was a very human thing, I'm paying my child's school fees and it has to be a seamless transaction and experience. What are the top 1, 2, 3 challenges that you face building that reliability into your ecosystem? What is it that keeps you up at night? And I extend the question to the panel.
All right, so I'll try to answer this very fast and quick. Of course, it is not easy because it's not just you as a bank can do something. You spoke about ecosystem, right? It's an ecosystem play, so you have to have a right ecosystem also helping you to drive and to define this experience. What we do, right? So that's where the innovation comes in from a thought process perspective, also from your own banking processes perspective. How can you make your own processes as STP as you can? I think Sampath mentioned about this. This is a very important area for the banks, because a lot of these inefficiencies are inbuilt into the banking processes also. So the banks have to look at their own processes first also to make it very simple. And the third thing is then how you make an ecosystem contribute to that. For that, you have to find right partners. You have to find right payment players, because if we don't do this, right, there are banks which are born digital, right? And these banks are founded on customer experience, because the whole rationale of their apps is that their apps do not look like a banking app. So when people talk about certain apps in the world, right, like apps of Revolut or apps of Nubank and etc., the one thing that everyone echoes is this app is so good, it almost do not look like a banking app, as if something that looks like a banking app is a bad thing, right? And why is that so? We have to think about it, right? Why is that so? Because banks have made it so complex, right? And that's where in future the game changer part will come into play, that how can you make it simple and how you keep innovating and keep simplifying this. It's not easy, but that's what we have to do as the banks.
I think the CEO of Intel once said that, we solve one bottleneck so that we can find what's the next bottleneck. So I think that the process re-engineering is a continuous process. It's not a one-time process. Look, with that, we just run out of time completely. I think, in fact, we've run over time and probably into the coffee break a little bit. But that said, thank you so much to my panelists. Really appreciate you sharing your time and your insights with the audience today.
Thank you. Thank you. Thank you. Thank you, everyone.